Good morning, my dear students and friends. Today we are going to see about the capital and revenue transaction. It is helpful for the CA and CMA foundation student and plus one student. Before going that, why the capital and revenue transaction happen? The main objective of accounting is business transaction is to ascertain the result of operating and financial portion of the business concern. The transactions carried on may yield a benefit only for the current accounting period and they may yield for a more than one accounting period. According to the matching principle, the expenses which are for a current period must be matched with the current revenue. It is of the matching concept are used in this period. Then we can go for the capital expenditure, revenue expenditure, deferred revenue expenditure. Because why it is classified? When we purchase a product, when we purchase a product name, whether it is a revenue nature or capital nature, that is classified. So capital expenditures are non-recurring nature. Non-recurring means it's not repeatedly happen again. Then the next point is contributed to the revenue earning capacity of the business. Contributed to the revenue earning. When we invest a capital, it should be earn more and more. That's a revenue earning capacity. Revenue earning capacity. That's a revenue earning capacity of business. And next point is benefit is available for a longer period. A longer period means one year or more than 1 year. Where it comes, the capital expenditure comes under on the asset side of the balance sheet. And asset side of the balance sheet. Are you clear that what is capital expenditure? It is a non-recurring nature. What is meaning of non-recurring? It's not happening again. Not happening again. And second point is contribute to the revenue earning capacity of the business. And third point is benefit is available for a longer period, more than a year, more than 1 year. And where it comes in, it comes under the asset side of the balance sheet. Example of capital expenditure: purchase of cost of fixed asset and purchase of cost of long-term investment. It's called the example for capital expenditure. And then we can move to the revenue expenditure. Revenue expenditure, it is a recurring nature, happening again and again. Revenue in nature, happening again and again. Happening again. And second point is carry on the day-to-day activities of the business. Say carrying on the day-to-day activities on the business. And third point, benefit is obtained within one accounting period. Within one accounting period. See everything day-to-day transaction. Revenue expenditure. What all you are purchasing tea. Tea is a staff welfare expenses. Day-to-day transaction. Tea, coffee, or stationery expenses. This is all the day-to-day activities of the business, and it will happen. Benefits is obtained within a one accounting period. And the fourth point is where it appears in the trading of P&L or balance sheet. Shows in the debit side of the trading and P&L account. Shown in the debit side of the trading and P&L account. Whether it is a direct or indirect, based on the expenses, whether it is direct or indirect, it will show on whether it is a direct expense, shown in trading expenses. Whether it is an indirect expense, it will show in the profit and loss account. Example of revenue expenditure: maintenance expenses of fixed asset and insurance premium, postage and telegram. And third one is finally we are going to deferred revenue expenditure. Deferred revenue expenditure is nothing but non-recurring in nature. Once it happened in a year, it's only one happen. Repeatedly should not happen again. It's called the deferred revenue expenditure. To be get benefit for a certain years, more than 2 or 3 years, more than one accounting period. What I said here. And the amount will be write off during the year is shown on the debit side of the P&L account. Debit side of the P&L account. The amount written off during the year shown on the debit side of the profit and loss account, and unwritten off portion will be shown on the asset side. This is the deferred expenditure specification. Example: heavy amount on the advertisement. If you give an advertisement, it will be more. It will be benefit for more than 2 or 3 years. And cost of major repair on fixed asset. I think that you all clear in the capital expenditure, revenue expenditure, and deferred revenue expenditure. Capital expenditure is expenditure which happen more than one accounting period, and revenue expenditure which is happen the expenses within an accounting period, and deferred revenue is more than 2 or more. This is the difference: capital, revenue, and deferred. And we can go for the topic. Next topic is called the capital receipt and revenue receipt. The same like what is capital expenditure, revenue expenditure, like just a difference. It is also non-recurring nature, capital receipt, and the amount is normally substantial. What is substantial means it's a large amount. And where it occurs, the capital receipt. The capital receipt is shown on the liability side of the balance sheet. Liability side of the balance sheet. For example, proceeds from issue of shares and debentures, is an example, and proceeds of sale of fixed asset. So all comes under the liability side of the balance sheet. And next topic is a revenue receipt. Revenue receipt is nothing but recurring nature. It's happening again and again. And next point, amount received generally small, only little big amount. For example, rent received. It's all little amount which were received again and again. The excess where it occurs. The excess of revenue received over the revenue expenses can be used for the distribution of the profit. The excess of revenue received, where it is? The excess of revenue received over the revenue expenses, revenue receipt over revenue expenses can be used for distribution as a profit. This is the revenue receipt concept. Example: proceeds from the sale of good and interest on investment received. Again, a rent receipt. This is all the example for revenue receipt. I think you all clear in the capital receipt and revenue receipt. We can solve one sum with all the things with capital, revenue, and deferred, and capital receipt and capital payment. For example, for first sum, overhaul expenses of second-hand machinery of purchase ₹5,000. And what it comes, whether it is capital or revenue or deferred revenue or capital receipt or revenue receipt. See, overhaul expenses of second-hand machinery, purchase for second-hand machinery, 5,000. So it is what it is. Clearly, you can say it is a capital expenditure. Capital expenditure. Office rent paid ₹2,000. Office rent, it's occurring monthly. So it is a revenue expenditure. Not clear? Office rent paid ₹2,000. It's a revenue expenditure. And third question: advertisement expenses amount to 10 crore to be introduced a new product. Advertisement expenses. Advertisement, once you made an advertisement, how many years it will be goes off? 2 or 3 years. So it is clearly you can say that it's a deferred revenue expenditure. Deferred revenue expenditure. And fourth one, the amount received from the trade receivable during the year. See, amount received from the trade receivable. From whom? A trade receivable. So it is clearly say that revenue receipt. Revenue receipt. And fifth question, insurance claim received on accounts of machinery damaged by fire. What amount? An insurance claim. And you can clearly say that it is a capital receipt. I think you are clear in this. And this is my academy name, nalayiniacademy, which is in Pondicherry, and I am taking for a CA, Foundation and Inter, and ICMA and CS, and also +1 +2 student. And my contact number 908-703-9899 and 6380845821. This is my number, and you can note down. And I have a channel in Telegram also, Sri Nalayini Academy, and you can download a partnership and LLP, a PDF which will helpful for us CA Foundation and Inter and CMA Foundation and Inter. Thank you.